Hi fams, welcome to my channel. In today's video, I'll be backtesting Crash 1000 using a checklist. First, we want to be able to identify the overall trend of the market from a higher time frame. We want to also identify a trading range, spot the institutional candle that captured liquidity and broke structure. We want to also wait for price to come back to the institutional candle. We scale down to a lower time frame, then look for entry on the mitigation candle or fair value gap. And then last, we want to use the fib levels for extra confirmation. Like as I've said, when using the fib level, we want to ensure price comes down to the 50%. This side is your discount zone, while above is your premium zone. So you have something like this. Price goes up, and then price wants to trade down in a bullish trend, and then we go up. So you want to wait for price to come back to this discount zone so that you can take your entry. Or if you are selling, you want to wait for something like this. Price is making series of highs and lows and lower lows and lower highs like that. You want to wait for price to come, you take your fib level, and then you move from here down to this last high. Yes, you want to wait for price to come to the premium zones, and then you can take a sell from this place. You can take a sell down from this premium zone and sell downward. This is very simple. So today we'll go to Crash 1000. As you can see, let's go to Crash 1000. Let's find out using our checklist what Crash 1000 has been doing. Okay, I wouldn't want to open this. Let me open Crash 1000. Let me move this to this place, Crash 1000. Our checklist says we want to find out the overall trend of the market. First, so Crash 1000, what has it been doing? Work with me as we take a flight on Crash 1000. Okay, this is Crash 1000. Okay, it's very obvious. Crash 1000 has been moving on a downtrend. Has been bearish. Crash 1000 has been bearish. Price give us this high, give us this. I'll take this for a high for now. Then give us this, give us something like this, give us something like this. So this is the momentum for Crash 1000. It has been bearish. As you can see, the trend of the market. We've been able to identify the trend of the market. The next is to find what is our trading range. What is our trading range? We've identified that Crash 1000 has been bearish. Now, what is our trading range? Trading range talks about the recent low and the recent high. This was a high. Price gave us this low. Price gave us this high. Price gave us this low. Give us this high. Give us this low, this high, this low, this high, this low. So this becomes our trading range. This was the last high to the last low. So this becomes our trading range. Let me remove this. So let me put our trading range there. This is our trading range. Here's our trading range. The last high and the recent low. These are trading range. So I would want to put this for you to understand. This is top range. Okay, this is low range. This is low range. This is the low range. Then this is the top range. So want to take price in between this range. Then what again can you see? We want to find out where is that institutional candle that captured liquidity that we should be looking at. Okay, this is the candle. Liquidity was swept in this place. And see how this candle came and took this liquidity. This was liquidity here. This was liquidity captured in this zone. This was liquidity captured. This was the institutional candle that captured this liquidity. The candle starts from here. So let me annotate on the open of the candle. That's the candle that captured liquidity. So let me write on it, institutional candle, or let me call it mitigation candle. Okay, I think I should. That's all right. This is the mitigation candle. So we want price to trade into it according to our checklist. Then we look for an entry on a lower time frame. So price will come into this place and give us that entry. Since we are backtesting, I'm going to show you some other things we should look out for. If you look at this place, there are a series of equal highs here suggesting of liquidity. This is internal liquidity within this place. I can spot a little imbalance around this region. A little imbalance around this region. I think around that region. There's imbalance around that region. There's also imbalance around this region. Imbalance around this region. Okay. So we've been able to identify what the market is coming to do. This was external liquidity that was swept. External liquidity was captured here, and now we'll go for internal liquidity. Either we'll take here and price distributes from here, or price comes here, clears this liquidity here and distribute from here. But this is the range. Then the next thing we want to bring out are fib levels and use it as extra confirmation. This is my fib from the last high to the recent low, the last low. This is the last low. Let me open these. I want to ensure it's on the high. We're using the week to the week. We're taking our feed from week to week. Okay, this is it. All right. Am I on the week? All right, something like this. So this above 50, this is equilibrium 50%. So price can distribute above here. It can come to 886 or 786. This is all our premium zones. From here, price can distribute from here or distribute here. Any movement from around this place, price can go down. Price can go down because these are premium zones. Price can come, distribute from here and go down. Whichever one that price also chooses to do, we'll need to wait for a lower time frame redistribution. Okay, let's see if we would have gotten an entry from this place. I'm going to remove all this now. Okay, let me use this. Price came, give us this high. Then price came into this place and gave us something like this. That was after price gave us this move. Give us this. This was the last high, the range, trading range. Price gave us this and gave us the lows. This was our trading range when the price was here. This was the trading range. All this has not been printed. These candles have not been printed. So price first of all came into this imbalance. There was a cube here. This was an imbalance. Price didn't feel that. Price left that imbalance. Then there was a cube here. If you scale down to a lower time frame, you see price came into that cube. There was a cube in this place. Let me go to 2 hours so that we see there was a cube in this place that price came into and gave us the distribution. Price came into that cube and gave us the distribution. This is where I'm looking at. Okay, this was the cube. This was the last move. This was the last move. All this was the cube, the last move that captured liquidity. If I take it from here, somewhere around here, this was the cube. Price came, gave us this cube. And what did price do? On lower time frame, these 2 hours now, price came into that place and distributed. And as I said, you will have the same movement, the same thing. Price came, first of all, created the liquidity. Price came, created this tons of liquidity around this place, which it was coming to sweep. And price came, swept the liquidity, and rallied down and broke structure. And broke the structure. Price came, broke structure. Then here becomes a point of interest. This was the candle that captured liquidity. The move started from here. So what did price do? Price traded into this imbalance around this place. There was an imbalance in that zone that price traded into and then gave us the move downward. So if you were on your chart, it's just to scale down to lower time frame. You played this. If you had played this, you have had your high, your stop loss at this end, and you would have taken price down to this place. This was a 1 to 6. If you go back to, let me go back to 4 hours or 8 hours, you see the external liquidity that was captured when price gave us the move. Okay, this was it. Follow me, farms. Let's see. This is we're back testing. This price action has happened already. We want to backtest and see how would have been able to play. So on a lower time frame, what did price do? Price came into this candle, created liquidity, tons of liquidity. If you check, it cleared the liquidity around this region. There was a liquidity sweep in that place. You can see it. Price came and broke structure at this point. Price broke structure at this point. At this point, what did price do? Price traded back into that zone and came. Couldn't break this low because this was our trading range. This place top range, and this was top range. Top range. As price didn't break the top range, price came back. This was the low range. So low range was going to be our external liquidity. The low range, since the market is bearish, we are selling down. This became our external liquidity. So if first move, you would have taken profit or taken partials in this place, this will give you 1 to 4. If you are taking this, or if you, before this, we had another entry at this point, price traded back into it, our stop loss would have been on the high around this place. They would have taken price to this external liquidity. This would have given us a 1 to 11, and then you miss first entry. This was second entry that have given us all this move 1 to 4. And if you are taking price down to this place, you took partials from here, and then okay, you took partials from this place, and then you took profit from here. This will give you 1 to 6. All right, we're back testing. Let's assume we didn't get that because we're not paying attention. Price came, and now price has given us a new range. Price has given us a new range, a new trading range. Give us a high, give us a lower low, because this body closed below this. So now we're looking for price to come back into any of these places, either this imbalance here. This is the imbalance. You can see that imbalance there. That's the imbalance. Or price comes here. There's actually no imbalance here, but on the higher time frame, there's an imbalance. Or price come back to this candle. either this place, but this already above 50%. So price can distribute from here, but we need to still find out on a lower time frame how to get in. We want to see that move on a lower time frame at our higher time frame point of interest. Okay, let me show you this. Let me show you this. Okay, this is higher time frame point of interest and lower time frame entry. If price is coming to the higher time frame point of interest, okay, this is a higher time frame point of interest. You have marked out the last lower high or the last higher low, and you want to get in. What are you expecting price to do on a lower time frame? This is it. Price will come, create a liquidity, go up, sweep the liquidity, and come into the institutional candle or the fair value gap within the mitigation candle on the higher time frame. And then it goes up. This is a change of character. Price came, created tons of liquidity here and goes up. Now price has traded high because this is a higher high, a higher low, a higher high, this is a higher low. Price should give us another higher high. Now this place becomes your lower time frame point of interest. So if you didn't catch this first move, then price will come back, clear this internal liquidity, trade into the lower time frame point of interest, and then price goes up. And come here, give us another tons of liquidity as if it was coming to this candle that took out this liquidity. Price rallied or broke this structure, giving us a higher high. Then price needed to come back to mitigate the lower time frame candle or point of interest. And price came and gave us another higher high. Now there is an institutional candle, a higher time frame institutional candle that is here. Price came, gave us a tons of liquidity, double top, and a lot of sellers were here. Price came all the way, boom, swept liquidity, traded into the institutional candle on the higher time frame, and then price began to give us this movement. This was a shift, market shift or shift in market structure or change of character. You can call it a break or structure. The market came back and traded back into this lower time frame point of interest, traded back after sweeping liquidity into the lower time frame point of interest. So if you had entered your short from here, you want to sell from here, your entry will be here. Then your stop loss will be at this last high. You can take price to this last point of interest where you should be taking profit, or you target this other place. It becomes the external liquidity for targets or this last low, and then price blew down. You will need to watch this video to understand market structure and how to spot higher time frame point of interest and then lower time frame entry. If you are new to the channel or you have not subscribed, do well to subscribe and drop your comments and questions in the comment section of this video so that they can be attended to. Okay, let's leave here. Now let's go backward. We're back testing. So let's go backward. Let's go backward. Let's see what would have been able to get. Let me zoom this in. Okay, price gave us that play here. Price came, there was an imbalance in this place that price came into. Price came into an imbalance around here. Higher time frame point of interest, the imbalance, and then price gave us a lower time frame mitigation, a lower time frame within this place. Okay, let's go, let's go. Price gave us this. We want to find out there was and there was a cube in this place that price came into. Let's go to the 4 hours. Let's see if we can find that. The cube that this price came into, giving us a higher low, a higher low. This is history, so it's long. We're back testing, so we want to find out what price has done previously. Okay, that was the structural point, and I think this was the imbalance that price traded into. Is a structural point. You can see this was a structural point. Price came into that imbalance. If you don't know what is structural point and you want me to make a video on structural point, kindly drop your comments in the comments section. I want you to make a video on understanding structural point. I will get that video for you. Now let's watch what price did when price was coming into that imbalance. Price gave us this, gave us a higher high, broke structure, gave us a lower low, traded into this cube, and broke structure, gave us a higher high, and then we started trading down since. Starting and gave us this trading range, the last high and the last low. Price gave us this as our new trading range. This was the new trading range. Price gave us this as the recent high, and this became the recent low. Recent low. So price began to trade backwards. Price traded in and came into this imbalance. You can see there was an imbalance within this region. Price came back into it, or this candle. I think this candle, price came yes to this candle and broke downwards. Let me go to 4 hours. I'll be dropping this analysis we just did on the Telegram group. So if you are not on the Telegram group, the link is in the description of this video. You need to join the Telegram group. I'll drop this analysis there so that you can keep an eye and also check it out. I drop my analysis and what I'm looking at in the Telegram group every day, daily, so that you can make sense out of the market. You can wait for price to come to that point of interest, and then on the lower time frame, then you can play the fair value gap or the mitigation candle. So I'll be dropping this as well in that place. Do well to join the Telegram group so that you can understand when we are taking the trade and why we are taking the. I'll be ending this video in this place. You want to watch the video and get to know how to spot your higher time frame point of interest, and then how to make an entry on a lower time frame. Thank you guys for watching. Do well to subscribe to our channel, like and share this video. Peace out.